the easiest benefit is the barrier to entry.
Yep.
So normally these REITs are publicly traded companies on the New York Stock Exchange. So you'll be able to pull up your favorite REIT portfolio with 2 clicks of a mouse on Robinhood, and all of a sudden you own shares, and now you are a part owner in a real estate company.
And you don't have to be accredited.
And you don't have to be accredited.
This is BetterWealth with Caleb Guilliams. All right, guys, we're going to be talking about REITs, what they are, the pros to investing in REITs, and then also the cons, and try to help you better understand if this is something, an asset class that you should be investing in. I'm here with Matt Fore. He hosts the Ice Cream with Investor podcast, where he goes into all types of real estate stuff, and you're on doing a series with me talking about real estate.
Yeah. So REITs, let's first define it. A REIT is a real estate investment trust. And basically what this is a company that operates a portfolio of real estate. And what you see in this space is usually people or companies are very niche focused. So there's a medical office REIT, there's an industrial warehouse REIT, there's a multifamily REIT. So usually they're companies that operate a portfolio of real estate. And why they structure themselves this way is really comes down to taxes. So I don't know all of the legal laws here and rules and things like that, but essentially as income comes in, as long as something like 90% goes back out to the investors in form of a dividend, then they get a special tax status. So you are that investor in this situation, and that's kind of what they are.
So the benefits of them are, like, what are the benefits of investing in a REIT?
Yeah, so if you're an investor and you want to invest in REITs, the easiest benefit is the barrier to entry.
Yep.
So normally these REITs are publicly traded companies on the New York Stock Exchange. So you'll be able to pull up your favorite REIT portfolio with 2 clicks of a mouse on Robinhood, and all of a sudden you own shares, and now you are a part owner in a real estate company.
And you don't have to be accredited.
And you don't have to be accredited. So really the barrier of entry is super, super low. If you just wanted to diversify your equity portfolio, this could be a play for you. The second benefit is it's liquid. So since it is a share traded on the publicly traded stock exchanges, you're able to buy today and sell tomorrow, buy today and sell within the next 5 minutes if you wanted to. So really the benefits that most investors get from real estate is they know they want to diversify their portfolio. They want to be in real estate. They don't want to go through the time of vetting operators from a syndication standpoint. They still want to maintain liquidity in case they need that cash super early. And they just want to get into the real estate space. And quite frankly, most of these REITs pay very, very juicy dividends. So it can be a good option there as well.
So is there any other pros to a REIT?
You also do get the appreciation since it's on a publicly traded stock exchange. Now, if a multifamily REIT, for instance, buys an apartment building in Denver and then sells it tomorrow for 2x the cost, you don't get that appreciation. But what hopefully you would see is that company, the public markets would see that company is increasing revenue, increasing their operating profit and things like that, and the stock price would appreciate there too. So you get the dividend in form of a cash payment, cash flow. You get the benefit of cash flow in the form of a dividend payment, as well as you could potentially see some appreciation as well.
So yeah, I guess my question was around cash flow. You get it in the form of a dividend, and what kind of cash flow are we looking at a REIT?
Yeah, so it really depends. So I bought some Simon Property Group earlier this year because, as you saw in 2020, the mall space got decimated. So Simon Property Group owns malls across the country. And when I lived in Austin, Texas, I lived in one of their communities, and it was a beautiful community. So I associate Simon Property Group as a luxury mall provider. At the time, their stock was trading at $60 a share, which produced about an 8.9% dividend. It now has grown to $120 a share. So I got that appreciation all while paying the same dividend. So that's a perfect example of how you can see some of the appreciation and still get some of the dividend payments and cash flow.
So I'm loving it so far. What are some of the cons as it relates to REITs, or are there a lot of cons?
Yeah, so a couple cons I can think of are taxes. So when you own an individual property, you're getting the deductions from interest of owning that property and advertising and operating costs and things like that. You're also getting accelerated depreciation schedules. There's something called cost segregation where you can move your depreciation forward and show a loss so you can reduce your tax liability. In a REIT, you're going to get paid you're going to have to pay taxes on the dividend.
Income taxes?
I think it's income taxes, actually. Yeah. I could be wrong there, so somebody please check me on that, but I think it's income taxes. So you're paying a high rate of taxes on your dividend payment. The other thing I think too is just market fluctuation. So like with anything in a stock price, somebody is coming to your door every second of every day and telling you what your company is worth. So in 2020, if something were to happen and we shut down the government or shut down the economy, then the stock market takes a 30% dip. Even though your portfolio might not be as impacted, you're just subject to market fluctuation. So you're going to have to deal with those.
So in other words, if I had to summarize REITs is a good solution for someone that likes real estate and wants it diversified, but really doesn't want any of the potential risk or potential headaches that real estate comes along. It's kind of like how to take your Robinhood account or the benefits of the buying and selling in the markets and taking and using real estate to back those assets. And so
absolutely. If you're an equity investor out there and you know you need to have some exposure to real estate, but don't want to go down the path of finding operators and properties and things like that, REITs are your option to diversify into real estate.
Amazing. Thank you so much for listening to the BetterWealth podcast. It would mean the world to me if you could hit subscribe, leave a review, and share this with the people that you know and love.